And I would like to welcome my fellow panelists. So we have Gaurav Jalan, founder and CEO of mPokket. We have Anil Kumar, Vice President at Growth Cashfree Payments. We have Vipul Sharma, founder CEO of Chqbook. We have Swastik Nigam, founder CEO of Winvesta, and Chiranth Patil, co-founder of Riskcovry. So friends, we have all seen, and I was there in one of the presentations earlier, and I heard a speaker talking about the scenario that's changing globally and the effect it's having on the Indian market and so on. So while we know that the microeconomic situation is changing and the markets are actually turning bearish, I wanted to put some facts on the table in front of you before we start this panel discussion. Okay. India is a country with 1.38 billion population, right? We have 2 million corporates, we have 42.5 million SMEs, and we have 63.5 million MSMEs. Okay. India has been churning out entrepreneurs since before the word startups came into the ecosystem. The thela wala at the nukkad, the small mom and pop shop, the retailer, we say parchuni ka dukan, they are all businesses in their own right. And businesses have grown on from there to become, big houses today. Now, in a country with such a vast population, with such a vast market opportunity size, do we really think that the effects that the global markets are having right now, they are going to last for a longer time? Personally, if you ask me, I think this is a phase. In around 4 to 6 months, this phase will pass come Diwali, and we will see a turnaround happening over there. Having said that, I am not here to discuss that. I am here to discuss the topic of the panel, that is need meets opportunity, #Fintech. So I'm going to start, with Swastik. And Swastik, we have seen that, with the change in the global markets, and especially because you work in the global markets, you work in, overseas banking and stuff. So tell us, what do you think is going to affect change from a fintech perspective? How do you think the foreign banking part of it is going to get affected? And what do you think fintechs can do to overcome that? Over to you, Swastik.
Sure, thanks. So I'll just give a very quick introduction of Winvesta, right? We're a cross-border neobank and a cross-border broker. We provide services to corporates and individuals with respect to the rest of the world. To summarize what we've been seeing happen in the rest of the world, firstly, there's inflation globally. Commodities prices are surging. We've already got central banks coming into action, especially in the US, with the Fed saying that they're going to raise interest rates and possibly raise it 4 times this year. What does that mean for the rest of the world? And we've already started seeing it happen. One is we're seeing currencies depreciate, right? Emerging market currencies do tend to depreciate. The US dollar tends to become a safe haven, not just for people from emerging markets like us, but even from many other developed markets, right? You'll probably see it happen across the world, whether it's the pound, euro, everything sort of depreciating against the dollar. What bearing does that have on an emerging market like us? And especially a little bit more central to where we're at. Given the rupee is depreciating, we'll see a lot more interest in exports, right? Our products become a lot more affordable to the rest of the world. So that's one interesting opportunity. What's the threat that we have? This rising inflation comes through to us. It comes through to us in terms of crude oil prices increasing, our cost structure has increased. But thankfully for fintech, what we have done over the last 6-7 years in terms of building many parts of it, right? The India stack, UPI, have basically told us that we can compress costs radically. And everything else is trying to get that super normal margin, right, across these various businesses. For us personally, we have a very large, I'd say, stake in the ground in terms of the growth opportunity in India and India's contribution to the rest of the world in terms of whether it's exports, whether it's interest in Indians investing overseas, banking overseas. We're already seeing a country where we've got now 100 unicorns, which was not expected for another 2 to 3 years coming through. And that just tells you a little bit in terms of us becoming a bit of a flag bearer for not just many emerging markets, but for many other markets globally. So pause there.
Thanks, Swastik, and I kind of agree with you over there because, as you rightly said, the JAM, Jandan Aadhar Mobile India Stack, what we created, we saw the largest financial inclusion programs being carried out in the country, and almost every Indian family having a bank account. I mean, which other country can claim to have that in the world today? And now that all those platforms, stacks are ready, it is upon fintechs to innovate on top of that and take it ahead. My next question is going to be Anil Kumar, Cashfree. So, Anil, Cashfree has been a fairly new player in the payment space compared to the other established players. How do you see yourself in the growth story in the payment space? And what are your plans with the new changing market dynamics? What are your plans in terms of deepening market penetration or new product development and so on?
I hope I'm audible. Yeah. Thank you so much, Vaibhav. And it's a pleasure to be here amongst this wonderful group of people. Cashfree is 6 years now, so I wouldn't call ourselves as too young. We're kind of stepping into our, teenage kind of a situation as far as a company life cycle is concerned. Having said that, what is it that we have been doing here? Over the course of the last 6 years, we have been able to kind of bring about a huge radical change as far as money movement is concerned, which is about bringing ease of money movement to any merchant partner or any customer who wishes to have a collections done or a kind of a disbursal done out. How did we manage to do that? Well, over the last 6 years, initially when we started off, the idea was to provide a seamless approach towards payouts. Payouts is nothing but disbursals. Now, as an approach towards the payout solution that we were building, it was about ensuring that the gig economy that was coming up in India in 2014, late 2015, would be able to use technology to be able to put money into the hands of their thousands of partners spread across India in a seamless fashion. And that was not something that was possible at that point in time because they essentially had to rely on a pretty complex network of banking, databases and dashboards where money would be moved in a weekly or a monthly fashion. It was impacting the way they could function better. And it was within this scale of events or movement of events that started off where we decided to turn full stack. And today we are a full stack payment technology company. And pretty much anyone who's signing up with Cashfree can expect to be provided with a overall technology payment solution as far as collection is concerned or payouts is concerned, to the extent where we are even in the process of launching a new BaaS solution. In terms of innovation, Vaibhav, I would say the last 6 to 7 years, we have been able to bring about some really interesting products which has been adopted well at a market level. Today, India's foremost mass transportation company, I would like to call them a company, uses us for a solution where they can partially accept payment and save on the MDR cost that normally hits a merchant if they have to do a on-the-spot acceptance in terms of the transaction. Similarly, we have built solutions around both the payment collection, which is the recurring payments, or in terms of the UPI space, which has helped almost 100,000 plus merchants today who are working with us automate, scale up, and also build their own business possibilities. It's very interesting to note that this space that we operate in, the kind of growth that is already seen. I mean, I've been a payment professional for the last 21 years. Having worked with a couple of banks before jumping into the startup ecosystem myself. And what I realized is that in 2003, 2004, when I used to go from an ICICI bank as a sales representative, to give a POS machine to a merchant, I was competing with cash. And today, it's no longer cash. It is various forms of digital payment. The shift has been immense. The shift has been huge. To the extent where today when we talk about acceptance of payment of even a small ticket size of 20 rupees or 10 rupees at a small kirana store, whether it is in Bagalkot or whether it is in Silchar, the reality is a UPI does the job. And 2016 April to 2022, where we are today, the shift has been phenomenal. I mean, the last number that we have is around 9,50,000 crores in terms of the transaction volume that's been processed, which is by far the largest in terms of instant payments anywhere in the world, in any country in the world. So that's the shift we are talking about. Coming to the point of, is there scope for newer entrants? I would say technology leads the way. Let me quote a parallel example, to bring in that context. 2015-16, when we had what we call as the last mile deliveries getting set up, it was exciting times because we could sit at home and order food and the food would reach. But today it's about 10 minutes. The disruption has been immense. And I'm sure it is going to become even more better. That's the space we are in, and we intend to make payments better in every fashion possible.
Thank you, Anil, and I can actually relate to you because when I was at Yes Bank and we were creating, from 2014 to 2020, we were creating all those API stacks, UPI platforms, and you name it, right, from, all the fintechs that we launched. And whatever innovations we did, we used to consider ourselves, the digital banking at Yes Bank, we used to be a fintech. And now I see that same journey, that fintechs taking it ahead from that point onwards and using these innovations or platforms that banks have carried out to an extent and then taking it to the next level. So in that same context, now let me move to you, Vipul. And Anil was talking about how he has helped merchants do that. And you are creating a neobank in the SME space. Okay, SME is a very, very interesting space because 42.5 million SMEs in the country. And the financial needs of an SME are extremely interesting because every bank wants to eye that particular need. Okay, so from a traditional brick and mortar setup that SME has been banking with, what is it different that you foresee a SME neobank doing, and why should SMEs actually bank with you and not with traditional banks?
Sure. No, so Vaibhav will just correct you. We actually cater to MSMEs, right? Which is
so more so than your market size goes from 42 million to 63 million.
So I answered your question also. Banks don't service MSMEs. They do service SMEs, and that's a tougher market actually, no doubt about it. But in our space, actually, we cater to the people that you guys buy stuff from. The kirana store owners, the shopkeepers, the small restaurants, traders, shoe shops, and so on and so forth across the country. And we have a very sharply defined target group. We go after sole proprietorships who have a turnover of less than 40 lakhs. And that's usually a customer who's not serviced, very largely unbanked. Most of my customers will have a cooperative bank account or they'll have a savings bank account. So large opportunity to be able to provide all kinds of services to them. In fact, and a lot of the customers are spread of course across the country. And we provide all kinds of, so we provide them accounts, lending, insurance. These are the three things that we do for them. And the entire approach really is that how do you make sure that this customer has a certain amount of respect when you go and talk to him, which he hasn't got, let's say, from traditional banks. I mean, imagine a small shopkeeper, walking into an MNC branch in Bangalore, probably won't get anybody to talk to him at all. So I think that's one of the challenges of giving them respect and also letting them know that they can digitally get a lot of stuff done. For most of my customers, going and doing a banking transaction or not getting access to lending or not having insurance can be dramatically life-changing at times. Banking is still a smaller part, but he still has to walk from a shop, go to a branch, do some basic things, and that is business lost. 98% of my community, my customer segment, actually have less than 4 employees, or lesser than that. How many shops have you gone to where there are a lot of employees waiting to service you, which is not like an MNC brand. So for them, going and doing banking is money lost. Not having access to lending, for example, is not being able to have the opportunity to grow, and not having insurance. And we saw that in COVID, where there were customers who didn't have insurance, had taken loans, and passed away. And, the shop had to be sold. Essentially the children go back almost a generation. And I think that is very unfortunate in this country. So I think that's where we try to come in and say, okay, can we make sure that we provide this segment what they need? And the interesting thing is that we hardly have any competition. We actually want more competition in this space. It's a blue ocean, and I think people who are here, you guys should do something for this community. We can't ourselves do everything that is required. Just to give you an example, just Kirana store owners in the country, there are all kinds of statistics, but anywhere between, a couple of 20, 30 lakhs to goes up to about 50, 60 lakhs to a crore or whatever. Just to modernize a shop, it will cost them about 1 to 2 lakhs, depending on the shop. So if you want to modernize 5 lakh stores in the country, you need 1 lakh crore rupees of capital. That is the scale of the impact. So I think, yeah, so the opportunity is immense. The products are few for this community. And of course, you need to be able to get down in the trenches, understand the customer, and then go forward and take it from there. And they usually have very simple needs. So making sure you meet those, give access to services right, I think that's, half the battle won in our case. Yeah.
Very well said. And I completely agree with you, because MSME and specifically the retailer, what we say Parchuni ki dukaan, he is a self-made entrepreneur. He has to juggle with so many things, right from his managing his supply chain to managing, that trade finance and into codes, because at that level it's not trade finance, but whatever 7 days, 15-day credit he gets to pay his distributor, and then even if he needs 2 more extra days, to pay that. Okay, if there is something on an app available, tick lending for 2 days, fantastic. Okay. If he is able to, carry out all his receivables management through that same app, if he is able to carry out his payables management through the same app, and let's understand that guy is not somebody who may be using a Tally or, other ERPs and so on, and he may be doing everything into, maybe he is a Khata book user, I don't know. And then he is also able to carry out his banking, and then वहाँ पे Vipul ने insurance भी भेज दिया, चलो यार shop insurance ले लो, take the shop insurance and you are taken care of if there is a fire or something. Fantastic, Vipul, very nice, very nice. So let me move from Vipul to Gaurav. And lending is the new buzzword. We have seen past couple of years, but we have also seen during COVID times that a lot of banks and financial institutions have struggled in lending, specifically on the collection side. And there is a need for a true blue digital only solution in this space. So what do you think? What is it that you guys are doing at mPokket to address this, and would like to say something on that?
Thank you, Vaibhav. Pleasure to be here. And no, what you said is very correct. Let me just start by introducing what we do here at mPokket. Right. So we, our vision and the goal we are working towards is to provide financial services to what we call the underserved youth of the country. And we define or categorize the underserved youth as people who are typically under 30 years old. It's not a hard number, but typically under 30 years old, and those who are lower down on the income ladder. Now, these individuals, let me give you some examples of who some of these people might be, right? I mean, your kind of average BPO employee, right? Someone who's working at your local restaurant, let's say a Ola Uber driver, right? These kind of individuals, I mean, they earn maybe anywhere between 20,000-50,000 rupees a month. And if you think about their access to financial services as a whole, right? We currently focus on credit, so I'm going to talk more about credit, but it generally applies to all sorts of financial services. If someone like this today wants to go and get a loan, it's practically impossible. I mean, no bank will give them a personal loan. They will not be eligible for a credit card, right? So there is no way for them to access credit. So To put this in perspective, I mean, I think a lot of people know this number, right? India today has only about 3.5 crore individuals that actually have credit cards. So the threshold today in our country for a bank to give out a credit card is high. It's only high income individuals with stable jobs who have a very good credit score already who are eligible, right? So we estimate that this segment of underserved youth, as we call it, there are about 350 odd who are waiting to be served. Now, it's also, I think, common knowledge that in India the personal credit to GDP ratio is very, very low. It's compared to advanced economies, it's very low. Even compared to other emerging markets like, let's say, China, Indonesia, it's very low. So there's a lot of talk about over leveraging in the world, but I think in India, at least from a personal credit perspective, we still have a very long way to go. And I think personal credit plays a very important role in improving quality of life for individuals. Right? If you think about where our country has come even in the last 10, 20 years, when even getting a car loan was difficult, right? I mean, today you can buy appliances, you can buy various things on credit, and that is what makes the quality of life of a person better by smoothing out cash flows. So now coming to what we're doing at mPokket, today we've given out loans to about 25 odd lakh individuals in this category. We are a purely digital business. We service about 19,000 pin codes in the country, right? So again, there are various, when you think about personal credit, there are various, consumers have various needs. We have chosen to focus on a certain segment of individuals who have a certain need, which is, smoothing out their short-term cash flows. And that's what we work towards. So our systems and processes are built towards that. But what we've seen is that, there is tremendous demand out there. As I said, we estimate that, there are about 350 million people in this category. Today, we have touched about 2 million. It's literally a drop in the ocean, right? So the demand is there. It's about how you reach out to these people. And then it's about how you engage with them in a productive manner. Again, I think it's, we all read the papers, we all read the news about, what's, harassment by digital lending apps, etc. So there are a lot of unscrupulous players out there as well who want to take advantage of the situation of individuals. So if you want to build a sustainable business, it's about how you do it in a compliant manner, and more importantly, more than the legal compliance, it's about doing something that is sustainable. So servicing the needs of an individual in a sustaining manner, not over leveraging them, etc. And obviously collections, etc. All of that is part of the business, right? So you have to build your business model according to the kind of customer you're servicing, the kind of product you're offering. So that's what we're trying to accomplish at mPokket.
Amazing. And friends, let us also understand that, credit is directly linked to your income, which is directly linked to bureau. And a lot of this underserved, he would be relying on a lot of alternate data, I'm sure about that. So moving on from you, Gaurav, I'm moving on to Chiranth, okay, who's the co-founder of Riskcovry. And, InsurTech, so we all know that, insurance used to be products that insurance companies used to sell. And suddenly, it changed from a product game to a platform game. And now we have InsurTech platforms which are there. And interestingly, for somebody like you, you can look at financial institutions as well as you can look at, regulated banks and fintechs as your customer base. Okay. So where do you see, this juggernaut of InsurTech going? And who do you think is better served to service the customer? Is it a fintech or is it regulated bank?
That's a great question, and thanks for that. Very relevant question. So for those of us who are not familiar with Riskcovry, so we are an InsurTech infrastructure platform. So our go-to-market language is insurance in a box. So think what payment gateways did to digital merchants to accept digital payments. We are doing that for same thing for insurance distribution. So it's a one-stop shop tech service for enabling any kind of insurance distribution product across any insurance carrier or insurer to any kind of a distribution platform. So in that context, a bank is a customer for us just as much as a fintech is. So the first question really, our tagline, a company's tagline is enabling insurance anywhere. And the anywhere bit is more important than the everywhere bit, right? Because insurance by definition is a push service. Everybody needs insurance, nobody wants it. So by definition, not everybody is geared to distribute it at scale. So it becomes a price sensitive, concentrated market from a distribution perspective. But having said that, we envision a future where insurance is just as ubiquitous as say payments, because there is risk everywhere. So risk management ought to be everywhere. So that is the fundamental sort of thesis of our venture. And if you think about it, there is the if and the why of distribution of insurance as it relates to banks and fintech is a no-brainer, right? By definition, fintechs and finserv, there is a natural affinity to sell insurance because by definition, customers are coming there to buy financial services products, right? So an insurance could be an amazing upsell, cross-sell, embedded, various kinds of use cases that can happen by way of insurance. It's just that three things differ between banks and fintechs. We call it the SRT framework, right? The scale, regulation, technology. So banks have scale already. They're already doing 20, close to 12, 13% in terms of insurance distribution right now across India. So they have ready scale, have the ability to naturally distribute insurance across attaching insurance back of credit disbursement or from their brand sales or telesales or within their net banking apps or mobile apps where people can come in and buy insurance directly in a DIY fashion, right? So all three fundamental distribution channels of insurance, embedded, assisted, and DIY, banks are naturally affiliated to do that, and they're already doing that at scale. Fintechs aren't, right? Fintechs are sort of have, by definition, lower scale, just getting off on their journeys. Consumer bases are smaller. The amount of insurance that you can negotiate in terms of premium pricing and all that becomes lower because of your threshold, etc., etc. So their ability to cross-sell insurance becomes that much lower. But having said that, we are seeing a great sort of movement in embedded insurance. We are seeing fintechs being able to negotiate out of their lending partners' balance sheet requirements and ability to cross-sell insurance, pretty much dynamically, independently increasing. So fintechs like, Chqbook has a insurance distribution license. They can sort of, cross-sell, upsell insurance products independently as well. So we are seeing that movement, happening more and more within the fintech community. The regulation side, banks are mandated by IRDA to have a corporate agency license, which means that they can work with 9 insurance companies across general, life and health. In most cases, we are seeing fintechs adopt broking license or a watered down version corporate agency license themselves, but they don't necessarily need to do that. That's where platform like ours come in, where we say that we bring you the insurance product, the technology, and the compliance license all rolled into one, offered as a platform. Take what you want, leave the rest. Right? So that kind of models are helpful for fintechs as well. The last becomes technology. So banks have enormous amount of traditional data that they can use to sort of think about insurance distribution at scale very intelligently. Fintechs don't, but having said that, they're faster to adopt technology. They don't have legacy core technologies that take a long time to integrate. They can go to market that much more faster. So the question becomes not if or why, the question becomes how and what, right? So the right product, right technology, right compliance model can give enormous scale, get to channel product fit, and then you kind of scale on the back of that. So for us, that's where a platform like us comes in. So, so that's what we have to say. And, we are seeing that, in fintechs and banks, just that the use cases differ, but there's already, there is scale already in banks, and fintechs are catching up much more faster.
So very well said, Chiranth. In fact, I agree with you, because what happens is, the banker inside me is now talking, insurance is a very important cross-sell product for the bank from an income perspective. And at the same time, as majority of you are servicing, the underserved or the MSMEs and so on, there is a need for sachet products of insurance, and that can only come from platforms like Riskcovry. So that's it, friends, from, our end from this panel. I can see the time's up is like in red. So thank you all, and it was nice to be with all of you. Thank you.